All right, good morning. It is Monday, September the 23rd, 2024. I hope everyone had a nice weekend. First off, just I appreciate the prayers on the little surgery I had. Those of you that saw the video last week, an old hockey injury, but it's looking good. So last Monday's video I had the big cast, so they took that off. Now I've got the little splint here, and I don't know. It feels good. I think they're saying I'm going to get that full function of that finger back, which is great. So I'm excited about that. Some other fun news over the weekend. My daughter Keegan, who she's made an appearance with me here a couple times in the past, but she had the first soccer game of the fall. Right, Dad is once again the coach. Just an absolute nail biter. Our team, which I thought it was really cute. 7, 8-year-olds. You kind of let them choose the team name, and they came up with the Rushing Otters. I thought that was pretty creative, pretty unique for. I think in years past we've been like the unicorns or the tigers, but the Rushing Otters. But so the Rushing Otters had a great team game. We scored with like 2 minutes left to win 1-0, the season opener. So Keegan and the rest of her teammates, the Rushing Otters, were excited. So that was fun. All right, markets last week. The market was excited last week as well. So the Fed, which everyone knew they were going to cut, consensus going into the meeting was a 25 basis point cut. And they cut a full half of a percent, right? So 50 basis points, which was definitely larger than expected. And then further signaled, they mentioned that they would like to do another 50 basis points before year end. All right, so that's a very dovish statement, very accommodative. So the bond market reacted like you thought it would. The day of the announcement, it's fun the way markets rapidly try to figure out what that means, right? So right when the Fed announced, equity markets shot up higher, and then they actually came back down to roughly flat on the day, and then overnight, going into the following morning into last Thursday, it was like wait a minute, this is definitely a net positive, for equities. So overnight, and so Thursday the market, huge day higher equity wise. So a nice week for equities. Looking at the yield curve, this is as healthy as the yield curve has looked in a long time. The 2-year U.S. Treasury 3.57 on my screen. The 10-year, let's see, that's at 3.75. So that's the widest spread, upward sloping from the 2 to the 10, and then into the 30s up at 4.1. So the healthiest yield curve we've had in a long time. It's just nice to see. But make no mistake, we have an election upcoming here, less than 2 months. The expectation should be. I would expect more volatility coming into the fall. That doesn't necessarily mean the market going lower, but definitely the market's going to be pricing in all kinds of moving parts, right? With lower rates, but again, you've seen the employment picture kind of start to get a little bit questionable the last few months. So will consumer spending start to slow a little bit? We have again an election, which, for those of you that have already had the review, we have the one slide on that, just in terms of election influence on markets. But it'll be really interesting. The election rate cuts. So we'll see. It makes our job fun. It keeps us on our toes in terms of portfolio rebalancing and trying to keep portfolios to allow the guardrails that we use to work. So. Really fun stuff. Another week of fall reviews up ahead here, which it's just been so fun seeing many of you. So we hope everyone has a wonderful week. questions, comments, concerns, please don't hesitate to reach out to our team. And we hope you have a nice week. Thanks.